You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
You can see in this market, the best thing about it is you shouldn't be in any rush. Let the market come to you. Obviously, the everything that needs to be there, the sentiment is not there, but I think it will be. But take advantage of this time where you can just pick off the best of the best, do your research, understand the companies, and just be methodical about it.
I'm Bill Powers. It's Mining Stock Education. Thanks for tuning back in. Well, last week was the mining world's biggest annual conference historically, which is the PDAC conference in Toronto. Typically, it is in the first week of March every year, but this year, it was in June. Next year, the event planners are planning to have it in March, but it was in June. I was not able to go. That's the first time I wasn't able to go since 2016. But my friend over at JuniorStockReview.com, Brian Leni, was there. So Brian, what was the general vibe of PDAC? Can you give us some feedback, being on the floor, sentiment amidst investors as well as issuers?
Sure. And thank you for having me, Bill. It was interesting, I'll have to say the least. The first day, so there was two conferences going at the same time or back to back, and I was at both of them. And I had got my pass on the Sunday as I was downtown anyways. And that's important because on the first day, Monday morning, I'm walking across the Sky Bridge to go down into the convention center, and they had police officers at the door. And I've never seen this before. And literally, he was shooing people away to go back to the front of the building to go in the front doors. And I had my pass, and he let me in. And I was like, thinking, what's going on? I go downstairs, and we start going down the elevator, and then you get a good picture of what's going on. There's a huge lineup. There's multiple levels for those who haven't been to the convention center. And the main sign-in is on the 700 level, and it was backed up all the way outside, almost down to the road. And I've never seen anything like that. And so I was actually quite excited and thought, you know what, this is maybe a lot better than I thought. And overall, it was very good. But I think that was sort of an anomaly into what I thought was going to be, standing room only in down the rows of companies. So it was definitely not the best attended PDAC that I've been to, but it was pretty good. On the investor side, I think it's kind of what you would think, that there's a lot of people with skepticism on what's going on in the market. Last week was also the Fed announcement week, and I think there was a lot of trepidation in terms of what was going to happen with that and how it's going to affect the market. As we saw, it's almost like a non-event, and I guess most people or the market had price that in on the Monday. And so when the announcement happened on Wednesday, there was really nothing. We've seen somewhat of a level market to the end of the week. And so that was kind of what I heard from most investors. On the issuer side, I think that, it's people are pretty disappointed with what's out there, and the people they were having come to their booth, a lot of suppliers and people trying to pitch, buy this or buy that, rather than hungry investors looking for the next best investment. But that's not everybody. Like, there was definitely investors out on the floor, and I think with certain companies got the most attraction. Uranium companies booths, seem to be particularly busy, and that's just one thing that I noticed going up and down the aisles.
What was the attendance? Did they announce how many people attended?
Yeah, I believe it was 17,000, which is... That's
less. That's 13,000 less than normal, isn't it?
Yeah, absolutely. And that's what kind of was the weird thing. And also there's a north and a south building. And for those that hadn't been there before, the north building was primarily, they did presentations down in the basement floor. And then they had like a trade floor. So it's all kinds of suppliers to the mining companies. That wasn't there. They're still doing presentations in the basement, but that whole north building floor was vacant. And then the main south building, I guess it would be on the 500 level, maybe. I'm trying to think how many levels down it is, where the investors exchange. They had it all open up. So the suppliers and where the kind of provinces and countries, show their wares, that was all open. And they had a huge cafeteria part. So my thinking is that it was a lot smaller than it was. And, what we saw on the first day was kind of an anomaly. And really, it does reflect what's going on in the market, and which is not a bad thing, honestly. Again, the whole scheme of things, you need to hit bottoms before you can go back up. And so, it was really productive for me. But on the market on a whole, it's very reflective of what's going on.
In the 13,000 people that weren't there relative to previous conferences, were those mostly retail, would you say, in your guesstimation?
Yeah, in my view, it was, because I can remember, it's depending on the year, 2016 was a good year. The floor was much busier. Like, you couldn't walk down the center of any of the aisles and not run into somebody. And I would say, especially on the Tuesday or Wednesday, it was more so, you had a clear path to go down. And again, it depended where you were. Like, I think that's, again, characteristic of, bear markets or bottoms, where certain companies are the ones that attract the people or the investors, and the periphery have a much harder time catching a bid, and catching an investor's attention. And so it's very reflective of what's going on. And again, it was very productive from my point of view. But I guess it depends on what you were looking for.
Brian, so one of the things that I've advised my listeners to do, if they want to get serious about junior mining stocks, you have to go to these conferences. You have to meet people. You have to go booth to booth and just talk to people, see what they say, listen to how they present their companies, get people's emails, contact information for future due diligence, things like this. You mentioned the conference was useful to you. Now you're obviously you're not a novice retail investor, but you're a private investor nonetheless. So how was this conference? Like, specifically, what did you get out of it? If you could share from the learning of my listeners.
Sure. So, we've been doing Zoom meetings for the last 2 years, or I have, and this is the first in person. And, they're very efficient. You can meet a lot of different companies. You hear the story. It's kind of like speed dating, right? Like, you've got 15 or 20 minutes with each company, and you can go through and you can really narrow down quite quickly. But you lose that personal touch, and your conversations go different places when you don't have a 20-minute time span. You can learn more about those issuers, about the people themselves, and other tidbits of what's going on with their exploration program, more color on the situation. And so for me, it just brought home to how much I miss that, and to how much I'm missing by not being there in person, because you don't get that type of interaction with people that, you can't substitute with Zoom. So for me, that was the biggest thing. And I typically only invested in companies that I had met and had a good feeling for who they were. I do put stock into my read on people, and that definitely hurt over the last 2 years, but it's what we had to do. So yeah, from that perspective, first, it was meeting the people and getting that extra color. Second, it does, when you sit back and think about the sentiment in the sector and where we are in the cycle, it brings home when you go there and you see the actual, how many people are there, people's moods. It really gives you a good reflection of what's going on in the market. And if that affects your investment horizon or how you put money into the market, it's definitely one of those things you can't get from a Zoom meeting, because you don't know how many other people are there asking questions and this sort of thing. So yeah, those would be the two biggest takeaways for me, is, meeting the people in person, and then get a gauge for sentiment. And then, maybe last, I really enjoy listening to other people when I go to, not company wise, but other investors that I really respect. I got to have lunch with a guy that I really respect, and listen to him talk. And, that otherwise I don't think would have happened. And so that was a big perk for me, and something that I wasn't expecting. So it was great from that perspective.
You mentioned the uranium booths were getting some love. What about the copper juniors?
Well, I think it was mixed. I think uranium just has, because of what happened last year, it's got that recency bias where people are still, and not that they shouldn't be, but they're still very focused on where they made quick money last year. And, that's good and bad. I think a lot of investors would do well to take the exact opposite approach. If something is super hot, and you've made your money, that's fine. Keep whatever money is there. But look at those things where nobody is, and where no one cares, or thinks that the outlook is abysmal. And that's probably where you're going to find the best value. And again, these things aren't quick money plays. Like, you're not going to make money overnight, most likely. but you're going to have the best margin of safety when it comes to placing your money in the market. And in a market like this, I think you need to be picky. And I think even those fast money bets, do have more risk than they did last year, considering all the things that are going on in the world. And so, you have to match that outlook on the market with what you're investing in and make sure you don't get shaken out in these, tumultuous times.
What about quick trades? So many of these juniors, these explorers have been sold off 80, 90%, some of them. Are there any quick trades that maybe you're looking at in your personal portfolio and maybe not even in the junior stock review portfolio?
That's a great question. That's actually something a bunch of guys were asking and from my newsletter. And I think it's great because, people are thinking about how to make money, not just necessarily sitting on something. And while I don't do a lot of it, I definitely do the odd, swing trade. So a couple of things that I would personally look for in a trade. I wouldn't be trading a company that I wouldn't want to own, and meaning that it's most likely going to be a portfolio company that I have or company that I'm willing to put a significant amount of money in. So if the trade doesn't work out, I'm still happy to hold the shares. Second, I also want to look for liquidity. You need to have a company that kind of, regardless of the market, is still doing a respectable amount of shares. And for perspective, I kind of look for a 5 times multiple. So if I wanted to take, a 10,000 share position and possibly trade that, I'm looking for a trade volume of, at least 50,000 on an average, daily basis. And that way I'm pretty sure that if it's not over one day, maybe over 2 days, I can unwind that position if I want to, or I can also buy that position in the same kind of manner in tranches or whichever. So I think if you cover those kind of bases and you're willing to part with those shares when you hit your price target, I guess that's maybe the third, is having a price target. I'm trying to make 10% and actually stick to it. I think the other problem is you buy that company or that shares for a trade, and then the thing starts going up like you'd hoped. And you think, an extra 5%, when it gets to 15%, I'm going to sell it. And then so often it comes right back, especially in this market where you seem to give your gains away, 2 days later. So if you set 10%, which I think in this market is a really good goal and is something that I've used as kind of a target, and actually stick to it. So the other thing you can do is as soon as you buy those shares, that 10,000 shares, you put a sell order in for 10,000 shares. Open till whenever, and it's set at that 10% price. And then that way you don't even have to be there to actually input it. And that's something that I've done. And that's something that a mentor had taught me, so that you actually stick to what you had planned. And that's so much of the problem.
But you only buy companies you wouldn't mind holding on to? Would that be another?
Well, that's me personally.
Yeah.
That's me personally. Like I would only do it with portfolio companies that I want to own regardless. Because again, with this market, especially all the things that are going on, I could see the trades not working, or maybe it never hits your sell target. That would be the other thing. So maybe, you do get the volatility, but maybe the volatility is only spiking to 8% and your sell order doesn't get filled. And so for me personally, I want to just hold shares that I are in my core portfolio and not have this outlier. The other side to it is if you are interested in just trading, like there are traders out there. And again, I think you have to know yourself and what you're actually looking for. But if you're looking for trades, look for those companies that are obviously good companies, but they have external promotion kind of built in. Silver is a great example. The silver bull, or the amount of people that want to talk about the silver bull, is, probably stronger than uranium is. And that's saying something. So if you find some of these silver companies that have really good volumes and they're good companies, but they have extra. So if there's a conference coming up and you can see presentations that outline the silver thesis, that's probably a pretty good trade. And to me, like with the VRIC, there was a couple ideas I had. I didn't execute on them, but I wondered if these, like I was looking through the presentation list, like, this is really good promotion, and this could, incite some greed. And again, I didn't follow up on those, but I think, those types of conferences that have the agenda laid out, take a look, and there might be something that aligns with how you play the market. And, those are those kind of situations I would look for.
Brian, I've been told by other newsletter writers in the sector that I would never recommend this stock to my subscribers. But in my own personal account, I invested in this niche market, right? This niche metal, because I think in the next 6 months, I can make X amount return. Are you looking at any exotic metals in the junior mining space right now?
No.
No. Copper, gold, sticking with
to me, liquidity is always the problem.
Yeah.
And so when you mix in a bad market with low liquidity and a niche metal, I think it's
the greater dummy theory. You kind of have to rely on that.
Well, it's tough. It's tough, and it's tougher than I think it needs to be. Again, if a person is investor is looking at a certain market and it's niche and it's like I remember somebody talking about niobium, and not everybody knows what that is. Like I know what it is because I come from the steel manufacturing business. And I know that it's used as an alloy and all these things, but the market is super, super small. There's probably a couple juniors that have any focus on it. And so there's a couple things. There's not a lot of people that are looking at that metal. The management teams that are, and this is not ubiquitous, and this is not a general, or maybe it's a general statement, but typically the best management teams are going to stick to the bigger commodities. They get the most attention, the most money, and that's where they're going to go. So I think to a certain degree, you might be rolling the dice a little bit more on the people too. And with these juniors, because it's so important to have good people running the company, doing the right things, financing at the right times, and capitalizing. And I've lost money on some of the smaller markets before, and that's probably another factor that has kind of steered me away from trying to capitalize on these things that I might even have some knowledge in. But in today's market, when you have gold companies, like very, very good gold companies that are selling at a drastic discount to value, run by good people, have cash, to me, that's so compelling. And when you do a risk analysis, in my view, that's where the money should be headed. But again, it's to each their own. You have to know yourself and what you're interested in and what you want to invest in. And if that suits you, then I think that's great. And you're doing yourself a better service if you're listening to yourself than necessarily someone else's opinion. So,
and that's what you're huge on too. Self-awareness. Like every time I talk with you, the only thing you can control 100% of the time is yourself. And you're big on self-awareness as a private investor, aren't you?
Well, that's right. And I just know that my biggest mistakes, for as many problems there are in the junior resource sector with numerous different things, it's always me that ends up making the mistake, or holding the shares too long, or buying at the wrong price, or it always comes back to me, and or getting caught up in different narratives. Like it's so easy to listen to people that are very good at selling or very good at promoting, and you get caught up in this narrative. And maybe the company, you take a look at yourself and you're like, what, I should be only investing in production and royalty companies because I don't like the high risk stuff, and I know a little bit about balance sheets and I understand that business a little bit better. Then you go hear somebody talk about exploration and how sexy it is, and the money you can make and how quick, and you get caught up in that. And really what you've done is you've completely gone against who you are as an investor yourself. And while you might be right, or you might be lucky enough to be right once, more often than not, at least in my experience, it comes back to bite you. And so absolutely. Being true to yourself, I think, is number one. And then everything else kind of flows from that.
Have you been told this story? I was told at a conference a couple of years ago that anytime a certain brokerage house or fund managers went and listened to Robert Friedland, the internal policy was you couldn't buy his stock within 24 hours of listening to him talk because he was such a persuasive speaker. Have you heard that, or is that an old wives' tale?
Well, I've heard it. I've definitely heard it. And I've listened to Robert speak, and he is phenomenal at putting together a sale or a story. I think that narrative is so important. But honestly, like what you just said there, waiting 24 hours, that's kind of, I've said that to my kids before. They make some money doing some work and they want to go buy something. And I've told, especially my oldest, she's going to be 10 this year. And I said to her, you know what, just wait a day, sleep on it. And if you still have to buy whatever it is, then go ahead and do it. You earned that money. And more often than not, she forgets. And that tells you right there that it was an impulse buy. And it's probably a good thing for investors to take heed of. Like for me, like the writing process and putting together my thesis, it takes a while. So I don't typically have buyer's remorse because, it takes me a while to come up with that idea and then be sold on it myself. But you can be impulsive in the market and grab shares, after hearing a really good speech, or, you hear a really good talk on silver or uranium and go out there, I want to buy it all. And typically that's when you're going to make a mistake. And you can see in this market, the best thing about it is you shouldn't be in any rush. Let the market come to you. Obviously, the everything that needs to be there, the sentiment is not there. But I think it will be. But take advantage of this time where you can just pick off the best of the best, do your research, understand the companies, and just be methodical about it.
Last question. So for this summer, it's in the Canadian markets. A lot of people just go away to the cottages and come back in September. Are you going to be nitpicking using the strategy you just laid out even throughout the summer? Or are you kind of checked out until September?
No, I'm always checked in. Okay. Even on vacation or other weeks, I'm still kind of thinking about stuff. Yeah. The approach I've taken is I'm going to add to my watch list. Yep. And I haven't seen really anything yet that tells me I need to buy today, but I need to go through in more detail these companies that I met with PDAC. There is a couple maybe new ideas. And again, I'm going to be really patient. And if I can let the news, again, play out in the market, not give these companies any recognition, that's even better. And so I can buy things. I can sit on the sidelines and wait for news to happen and then potentially buy, because even these good drill results are coming out and it's used as a liquidity event, which for investors sitting on the sideline, if you know those companies, you have a really good watch list and you know where to deploy money when it's time. It's a great situation. And the other side to that is, Bill, I think this market could easily turn at any point too. So as negative as things seem, I think there's every reason to be very bullish on the resource sector. And so it could change very quick.
So if you do recommend these companies, you got to be on your subscription at JuniorStockReview.com. Before you leave, remind new listeners what to find there.
So Junior Stock Review, it's a newsletter published every week. I do market comments. I do portfolio review videos. I rank the companies on a weekly basis, and I have buy at or under prices. All these companies are ones that I personally hold in my portfolio. They're ones that I think show the best value in the market. That's a big component of how I invest. And I think give the investor the best risk to reward. But again, you got to match that to yourself. And there's going to be companies that you may or may not like. But that's what I present in Junior Stock Review Premium on a weekly basis.
Excellent. Brian, thank you for coming on the show today.
Thank you for having me, Bill.